All right. Hello, everybody. Welcome to the stream. Of course, it's the Wednesday webinar session, and you guys know what it means. It means Tyrone and Tom are in the building. Is that right, Ty? Is that how we say it nowadays?
It is. Welcome, everyone. Yeah, you've got basically one in prison and one out. I am absolutely out of lockdown and enjoying Ocean Grove thoroughly. Thomas is still in lockdown. So, tale of two regions is Victoria at the moment. But that's okay.
Can't leave the state.
The market doesn't care. The market does not care. The ASX 200 went to 7,618 today. So it seems that the more doom and gloom there is, the higher the market will go. So I can't wait to have a look at that.
Yeah, so most of the interest this week's been in, of course, the crypto markets. This is for the 11th of August, 2021, by the way. And we'll just quickly go through our standard stuff here. Make sure as well, can you guys hear Tyrone clearly? Just let us know. We're trying a little bit different setup this week. Hopefully it works out. And if it doesn't, well, I'm going to use the other software next week. Of course, BTC to the moon, as Richard Wyckoff once said, Ty. You know, that's a real quote, by the way, guys. I'm pretty sure he said that. Quick risk warning here. It's important to understand that any information contained in this webinar is purely for educational purposes or live video. And this information presented must be considered only general in nature. The information provided does not take your specific needs or circumstances into consideration, and you must look at your own personal situation and requirements before making any financial decisions, and seek independent financial advice if necessary. I feel like that was a tongue twister today, Ty. All right, let's get out of here.
Thomas is the financial planner. Just ask Thomas for financial advice. He'll give it to you.
No, don't talk to me. Technical education concepts, all right? There we go. Tony Hall says, Ty is sounding great. There must be someone else in the room. He doesn't have the faith, Ty. Doesn't have the faith. All right. So, look, we'll start off here with the currencies as per usual. I guess, look, my analysis here with Ty, I was doing some pre-analysis with Tyrone. We were looking at it, and we're like, we're going to find you guys something cool this week. And I might actually have to put it back on the community. If you've got good FOREX setups, show us them, because we've got CPI coming out very, very soon, Ty. We'll just have a look here. CPI data, 8:30 a.m. ET right now. Let's refresh this so you guys can see. It's 7:04. And what that means is that we're at the tippity top. We're at point critical on the euro. We're at resistances and supports all over the currencies. And I think a lot of this is the blowback from, of course, the non-farm payrolls. Non-farm payrolls sent the dollar index into a nice bullish action. A lot of you should have been from last week on the short side of things like the euro. I would be disappointed if the room wasn't short in the euro last week, Ty.
Yeah, I agree. The dollar, when the dollar index shows strength at a level, it wasn't just at a normal level too, right? It was at a roll reversal zone, sitting on the 50. Like, it had a lot going for it. It did have a lot going for it, and it's hit the target. Look, at the end of the day, it's there already.
Yeah. It's at mission critical coming into the CPI data now, which we'll be covering on the other stream in 1.5 hours.
If it breaks here, it's going a long way. I mean, if this gets up past this level here, boy oh boy, the euro's going back to 114. I'll tell you that, and that is one big double bottom. Like, look where it's going to go. Show them, Thomas. Show them.
Yeah, there's some pretty big, like, large moves that can occur here, and I think you want to
look at that roll reversal.
You want to clip it around this area here, but the bodies go straight in. So yeah, this is
that equals the euro 114. Don't worry about that. It's a euro. That's a euro USD 114 or 113 if that plays out. So very, very important level. Extraordinarily important.
It's going to be crazy if it does occur. So let's have a look at the inverse here. So we've got basically the dollar index at the peak. We've got the euro US dollar at the support. We know that if it cracks through this level, it goes to the next support, which is 116. As Tyrone alluded to, the next really key zone is down here at this 114, where the wicks were previously. So that's that 114 level. So we've got euro potential to go back down into here. Then if it gets underneath that zone with the dollar index strength, then back down into here. We've also got another opportunity that might happen over the next week, which is we get a rally off this point due to the core CPI data or whatever. And then that pushes it back up into this level which then could be a good role reversal short to the downside, or at least a potential for us to come in and have a look at that in the markets. So there are some actionable stuff that's moving forward here in the technicals, but when I'm looking at it, so much is completed. So many things have come through.
All those, every time you see one of those yellow or blue lines, especially the yellow ones, that means one of Thomas's trades is completed. So you can see that it's amazing he's here with us tonight. He should be celebrating all these wins because he's been shorting this thing all the way from 118.54. So, and there's no reason why it wouldn't stop. But it's been a good trade, and it's been technically very sound actually as well. This hasn't been a freak of nature just doing its own thing. This has been very technically sound. Every level has held up very strongly. All the pullbacks have happened to the right places, and the market has behaved itself very well. So I know a lot of people in the community have shorted this and got it, which is great.
Yeah.
And I think the party, is it, well, like I said, I mean, we'll see what the news does, but yeah, realistically, it's got a lot in it. I want to see it go short. From a selfish standpoint, because if it does, I think that we're going to get some really good trading in that trend, because what that's going to do is it establish a very strong trend down for 300 pips, and you're going to get a heap of opportunities to get it down there. Like, you're going to get a heap of opportunities. Whereas on the way up, you look at it and you see traffic everywhere. Like, on the way up, there's so much stuff in front of it now. Every one of those fences that Thomas drew on the way down is going to cause it problems on the way up. So that's why I'd rather it short, because if it shorts, it's got a lot less problems to get through. Does that make sense?
Yeah, I mean, it makes sense to me. I mean, if you're going back, especially if we get back through here, then all of a sudden we've got to worry about this. We've got to worry about all these yellow lines become something we have to care about. And that's not going to be exceptional there. It sounds like we've got clipping issues again, which is a bit of a shame. All right, well, we'll keep moving through some of these currencies. I look at the odd US dollar. That's another one that's got some potential further shorting in it here, Ty. I mean, basically, it is a flag that's, really getting ready to smash itself down here. And if it does go this little bit lower, which is, again, going to be core CPI, you would think it's going all the way down to the 72 zone, the 72 kind of 20, and then we'll move down to maybe something like the 70-50 area after that. I like these trades. I think they're okay. Again, is it as good as we've seen? I really thought the euro last week was just, the last couple of weeks has been really sweet. I mean, especially when we saw this. I mean, guys in the room, come on now. If you're not looking at this on the daily and you're not spotting rejection, and then I want to show you on the 2 hour. Because no excuses here. That even the 2 hour, look at the role reversal. Oh my God. It's so good, Ty. Yes, you're right. Celebration of the euro short is real. But that being said, if you miss it and you're going to kick yourself, it's not about kicking yourself. It's just recognizing the same thing that happened over here a few weeks before happened again in currency.
Almost identical.
Yep. It is. So what I would do is snapshot it, burn it into your memory, and then go and apply it to all the markets that you've been looking at. Because these are solid concepts. We used it in Zoom. Sorry to go over to a different stock, but we used the same concept in Zoom. Multiple rejections off a role reversal, which led us into a buy that got us to the zone, and now we don't care about Zoom. That's why Zoom is off the private list right now, because you know what? I don't like the stock. Tyro doesn't like the stock. I don't understand. I don't like it. But the trade was there. You cannot ignore what the trade's telling you, what the volume's telling you, what everything. It's the same thing, guys. It's not rocket science what we're teaching, but being able to apply it and being able to be patient enough to wait for that next opportunity is, I think, the toughest part here. So, Ty, that almost ends the kind of currency here. We've got US dollar CAD, which maybe I'll let you mention on. There's a few people asking about that one. I'll move over to gold, silver quickly. Gold got smoked on Monday morning. It really got punished through. Again, Warwick out there was in the short side because he was following the trend, which is excellent. We have the little long leg doji on the daily here. Ty, I mean, maybe you'd touch this. I'm not even touching gold right now. The shorts got hit. I even got accidentally triggered down here with a buy, which is fine, but it was only a very small one. And other than that, I have no opinion on this.
Yeah, when it does that sort of thing, you've got to let it settle down again and find its feet. It could be back down at 1680 just as fast as it can be back up at 1800. And I don't know which way it's going to go. It's too hard to read. When it does that, that's not normal technical movement. So you've got to let it sort itself out, find a rhythm again, and then we can start to play the game again. But for mine, it's too hard.
Yeah, you've got to wait for usually the structural formation of the TA to come back after such an aggressive shock, and that is going to be one of the problems that we've got there. So we've got the US 500 tie. It's stuck in the middle of nowhere land. It's got little long leg dojis here on the futures doing nothing. We've got the QQQ Nasdaq showing weakness again, long leg doji, indecision candle, and didn't close underneath. I mean, this market, it's like it's begging to turn around. I feel like it's like saying we're trappeting you during the time of year that we're going to do it. We're all sucking everybody in. The euphoria is real in several things in the market, and then we're going to punish you all for buying.
You know what it's like. I'll tell you exactly what it's like.
Okay,
and
give it to
me. A lot of you are going to be out there understanding exactly what I'm talking about, and you're going to say, you know what? Ty really does know what he's talking about here. Thomas is not going to understand. Thomas will not understand at all. He will not understand this. But I'm telling you that the SP 500, the ASX 200, the Nasdaq is like an overtired child. It absolutely will not go to sleep. You know it all. You know out there people who have got kids. You know exactly what I'm talking about. They will not go to sleep. They refuse to go to sleep, but they are so tired they can't keep their eyes open. That's what these markets are at the moment. They are so tired, but they are absolutely fighting. And all they're doing is actually, stealing the last little bit of the FOMO money just to make sure that they cop every single little bit before the seasonal takes over. The seasonal will take over. Rest assured. It's just a case of waiting. And they're looking tighter and tighter and tighter. And that move today on the ASX 200 was one of the most tired, blasting through a new high moves I've seen in a very, very long time. And it finished accordingly. But for those of you who know what I'm talking about, you got kids, what the markets are like at the moment, they just refuse to go to sleep.
The ASX 200 is a beast, Ty. It's unstoppable. The banks are the best, don't you know? Yeah, look, the market's going good, and this is just the ASX quickly here. It's a little bit different to the other markets. And you might say, well, this one looks a lot stronger. It's going to because the financials are firing. We've got the 10-year kind of going up in America right now. We said it at the start of the week. I put it on the weekend videos. The 10-year is probably the thing I'm watching most closely. And coming into even this core CPI here today, look, did we get a technical breakout? Absolutely. Did we then see further follow-on effect? Absolutely. Does it pay to have your opinions at the door? Sure. From a TA perspective, you've got to follow the system. It's just that Tyron and I look at
the volume though. Look at the volume.
Well, the volume's definitely dropping, but yeah,
the volume's dropping as the market's going up. That's telling you that it's only very small retail money going in now. And this is a weekly chart, right? This is pretty serious.
Yeah, exactly. And I think if we go over to something like STW, one of the bigger funds, you can see that volume here is significantly less than the aggressive kind of buying that was going on back in the start of 2021, even the period over here. So look, do I like the Australian market, or does Tyron and I like the Australian market right now? We think it's okay. It always traditionally has a better seasonal at this time of year than the US market due to this tech slowdown after earnings. But that being said, there's plenty of very questionable, well-known PE ratios that shouldn't be holding strong. So there's a lot of sugar rush stocks in Australia, like massive dividends from stocks, massive, paybacks and buyback shares and all these types of things they like to fandangle after a recession tie. It's happening again, and this creates a sugar rush. But yeah, it's very, very so much. This market, would we be investing heavily here? No. And we've said this sometimes. We've talked about actionable data, and it's something we'll be bringing into our group mentoring in the future, which we'll hopefully talk about at the end of today's session. But basically speaking, using actionable data and knowing the time of year, even if you're trading this way, Ty and I wouldn't load heavier here. This is not the time we load heavier. This is the time we pull back, and if we're trading it because the technical's telling us that way, then we trade it. And that's what we do. We trade it, but we don't necessarily load up the the truck with the orders, because it's not the type of time that we feel very comfortable in buying this kind of I guess you would say opportunity at this stage. Let's move through some stocks though, Ty, because there has been some stuff that's looking a little bit better there. Is there anything you particularly have liked in the Australian market, or should I move on to the American and some of the things I'm seeing?
Yeah, I think that look, the Australian market at the moment is probably, I think a lot of them are looking fairly tired. You know, a few of the things that we've traded most recently, most people probably in the room wouldn't understand why we did it. And that was actually, do you want to bring up Origin? Do you want to just maybe let's have a quick look at Origin and explain why we did this?
Okay,
it's pretty straightforward. I think everybody can see why. Can you see?
Yeah,
free beer in cans for anyone who a free beer in cans at the thing. If you can tell us why we bought up at the $4 on this one and reloaded them with options.
So this was realistically, Ty, just the good support zone in the Australian stocks. Effectively, you guys know that yes, it is weakening. I mean, we always say okay, but Tom and Ty, this is weakening. It's got the series of lower peaks coming through here. Look, when you understand a stock and you understand kind of like some of the things that were happening, there was an overreaction that happened that day, and that was an overreaction that could be taken advantage of. We also know through talking about actionable data that we had a rotation out of energy stocks. It was they were basically punishing energy stocks, and the combined forces allowed for a purchase on that day. Now, as Tyrone said, we applied an option strategy to it. The reason we do that is we want to eliminate as much risk as we can, and we'll be discussing these points more and more and more throughout time. Are we looking for a $10 stock price here on Origin, Ty? Hell no.
Oh no.
No.
There's only one thing more that Thomas and I like doing that is more important than the Wednesday webinars. That's bringing in income. That's our favorite.
I love it.
Wednesday webinars come second. So bringing in income is our number one goal. And Origin provided an absolutely golden opportunity at that level to bring in effectively about 10% in a matter of a month with very, very minimal risk. And you're going to learn a lot more about that soon. Yeah, Origin is the only one that's really, you look at any other one and they're actually quite difficult. So we do like Origin for that particular trade. Probably, I think a couple of the American stocks are making a little bit more sense, though, Thomas. I think a couple of the other ones are standing up a bit more.
Yeah, so I'll go through some of my kind of favorites here at the moment. So firstly, I just want to let everyone know I am watching Apple incredibly closely. Now, it's not because I feel like trading Apple particularly. I think it had good trades on it. I think this breakout here was good, the trend line, etc. And we know this trend line is still very active. So for anyone that's been using the charts, I believe I shared them. It should be working with you guys in the private community. You should now be able to see some of the lines I've got here. I will continue to tailor them up. I've also created a little FX Evolution private watch list group as well, where I'll update some of these. I'll start cleaning them up for you guys and segregating them all so you can see some of the stocks that we really do like. But I'm using Apple because it's stuck in a range up here, Ty. And I think that if it gets through this 50 exponential moving average on the daily, that this is where some shorting potential will come into the market. We've got 135 as the target. And then underneath that, a very heavy, very nice potential pickup here on something like Apple. Now, we break that down to a percentage, you'd be looking at around a 10%, 11% discount. You might think that's not going to happen. Yeah, it certainly could. So we're after earnings. I like this trend line a lot, Ty, as reload zones for Apple. I think it's pretty solid. Your thoughts?
Yeah, that's good. Yeah, I like it. Got a bit of work to do at the moment.
Oh yeah, but it gets underneath here, and here.
Yeah,
both good.
Happy days. I think it's got a really steady target, and I think that when you've got such a good base, it opens up so many opportunities. And for all of you, naked foot sellers who are just trying to, buy income, like what better level than underneath that trend line to be buying them? Because I mean, if the stock gets there, you'd be happy to own it. But if it doesn't, well, you collected income anyway.
Definitely a strategy you could apply there. You could apply spreads, all sorts of things. So
income is the word of the night. We love income because you know why income's important. I'll quickly say it. The reason why you need to diversify your trading to the point where you're bringing in income no matter what is that when the markets are really, really shit and you don't want to trade them, you don't want to be forced to trade them. Whereas when you're trading income-based strategies, a shit market is actually a good way to make money because the income is actually steady anyway. So, and when I say that, I'm talking about premium, options premium. A crap sideways market is actually an option premium dream, right? So you need that combination. So when the market isn't playing the game technically and it's not giving you good opportunities, you're still making money. Okay, and that's the important part. You're always consistently making money week in, week out, no matter what the market is doing, and that's the important part.
And
that's why you need to bring that diversification.
So good, guys, because as Tyrone said, you're making it consistently. You're actually trading a decent amount, so it makes it feel like you're active, but at the same time, really what you're doing is you're doing very small amounts of risk to make, very consistent kinds of income. I mean, that's the beauty of it all. So when you bring all this stuff together, the reason why we're starting to move into the income side is because last year during a pandemic, Ty, do you want to explain why it's very hard to do income plays effectively during a pandemic or a massive recession crash?
Yeah, most definitely. Because when you're getting big volatile moves, it's difficult to actually preempt where the market's going to stop or where the market's going to actually turn around and go. So it does make option selling quite difficult because unless you're actually playing a different game, at which point you're doing long calls or short puts,
That's
or
correct.
You're doing something a little bit different. But for the most part, it's difficult to make income in that. That's more a trend-based strategy. So it does become difficult to make income in that. But in saying that, it's a scalper and swing trader's dream. And that's the difference. Like when you got one not firing, the other one is going to. Sideways markets are great for income.
Yep.
Very heavily volatile markets aren't that great for income. Although you get good premium, you're still you're really putting in risk there, and you're going to get blown out. Like if the market moves really, really sharply, you're not going to lose, but you're not going to make a lot, right? And the whole point is to keep the income steady. So it's good to have both in your trading toolbox. So when the appropriate market is there, you trade it with the appropriate tool. That's what it really comes down to.
And that's right, Ty. We're now past year one of pandemic to where we are now. We're getting into that 18-month kind of period. When that happens, we start to see this pullback that generally occurred after the global financial crisis and probably will occur here. When that occurs, we go into gradual growth. Now, most traders or a lot of traders out there and investors won't be used to now, I can't believe it, Ty, a 5 to 7% per annum market. Now, that's what we're used to. We're used to borrowing 5 to 7%. Now, if you're getting 5 to 7% markets, of course, some stocks will go better, some stocks will do worse. But this is where the premium game comes in and understanding the TAs. So premium will win these next couple of years, I believe, over the market returns. Your thoughts, Ty?
Yeah, no, 100% agree. Yeah, 100% agree. And in time, a lot of people will realize that actually, 8 to 12 is what we're generally aiming for most of our clients. But you'll realize that that's actually a really good income when you're doing it in a steady state. Like you're not taking big risks to get that sort of thing. That's the important part. You're not making big risks to actually get that income. It's actually quite steady, and you're going to make that whether the market's going sideways, up or down. And just for a point, Stephen, that was a technical term in the course. It's just that the licensee edited it out. I did refer to the market.
Can I edit it out on YouTube so we don't get demonetized by Tyrone?
This channel is not monetized, so it doesn't matter.
Subscribe, guys.
Yeah, subscribe. Can you guys subscribe? Far out, man.
We're not even
one channel's got.
Yeah, I know.
One's getting 70,000 followers, and this one's got like 500. Goodness. But yeah, now look, you guys know what I'm talking about. When the market's doing that crap that you really don't want to, it's hard to trade. You've got to have that other option to make sure you don't want to just go away and say, because what happens if you haven't got that up your arsenal or you're in your toolbox? What's going to happen is that you'll be forced to trade a market that you don't want to trade.
Yeah,
and that's a problem. That's a bigger problem. That's then you start making mistakes. You don't want to be doing that. So you want the appropriate trade for the appropriate market, and you don't want to be forced into doing something because you feel you need to make money, but the market's not right. Throw another strategy at it, and you'll find that you'll be very, very consistent doing so. Really important.
So Ty, I want to go through three stocks here. So firstly, Amazon. I like this 3,400 if it did close above, but notice how the weakness is coming into this trend line. Now, we've talked a lot about the idea that maybe people have bought a little bit too much stuff over the last year, and they're starting to move into services. There's a whole bunch of people with just rubbish at home. They're like, what am I going to do with this? All right, now I'm going to go sell at the garage sale. I'm not going to buy anything for a while. That's putting pressure here on Amazon. Now we can actually see it in the price action. See how this price action, it didn't instantly rebound. Now most times with tech, it goes woohoo when we fill the gap, and everyone's conditioned to buy the dip. This is the first time in a while that we haven't had a very quick kind of rebound here off gaps. Even over here on the left-hand side, you'll notice it went, pretty fast up. So as it's getting gradually weaker here, that's not a good sign for Amazon. Now, there is a lot of buys that have come through yesterday in the call options, short-dated and medium-dated in the private community. But I think we're looking for like a 3,400 closure. And then at that point, yes, you're instigating participation. Right now, very, very tough. We'll move through to Roku here because Roku was a similar one. Instantly dumped down, little bit of buying, and then all of a sudden some weakness coming through here. Now we're looking at this 200 simple moving average and the previous resistance at 359. We've got a question coming in here, and it's and also Amazon lost its main man. You know, the main man went to space. That's never good. We got Marciege S. Probably butchered your name. Sorry about that. Do you feel like the amount of opportunities in the market will gradually be decreasing month over month or year over year? So I actually think no. I never think, it depends what your opportunities you're looking for. So if your opportunities are make 100% and square over a 2-month period, then yeah, okay, sure. That might be reduced. A lot of people will go to penny stocks, and obviously this whole retail Wall Street bets, Fin tweets, this, that, people spamming and everyone getting into something and bullying it up. That's here to stay to a degree. But if that's not the game you play, then yes, you'll have to find different ways of finding really good percentage returns. And a lot of that's going to come down to consistent credit, compounding, and of course, finding just very specific stocks in the markets. It's not going to be as easy as just go buy SP 500 and then make 30% in a year, is it, Ty?
No, that's right. 100%. I know people sometimes think it's that easy, but look, to probably top on that, that's a common question that comes up every time the market's at a top, and people think this is going to be all over soon. When it does pull back, all it does is create more opportunities. Don't worry about that. The market's been around for 150, 200 years. And it's not going anywhere. If anything, it's going to get better. If you ask me, I actually think it's going to get better because the more people that are actually actively trading, the liquidity increases. Technicals hold up no matter what. Like that's the great thing. You know, liquidity makes technicals work. So, you know, realistically, it might have some flat spots, and it does. That's why when you've got different strategies that you can place, there's always going to be a market that you can trade. It's just understanding and identifying the market so you know the way to trade it. That's the most important thing. But is it going to run out? No, market's not going anywhere. Don't worry about that.
Let's take a look here at, I'm shouting out Ecker a little bit too much, I think, at the moment. Ecker, if you're out there, why am I shouting you out so much? Look, he found this X, and he's dealt with an X a few times, and I think it's, again, just a really good, nice technical analysis here. And again, it's very recent. We did talk about it on the stream. And this is something that's applying many of the philosophies that Tyra and I like. So firstly, it's broken through a resistance. It's closed above, which could be your first entry point of scaling. It's then come up and pulled back, which could be another point of scaling. Because remember, we talk about the conservative entry and the aggressive entry. This is the aggressive entry. This is the conservative entry. Then we get a rejection-looking candle followed by a long leg doji, followed by follow-through that then leads into the resistance. Now, it's up here pre-market 1.52%. But this is a mixture of looking at rotation into materials again, while it's been lagging, which again is very actionable data, and the technical being above, and of course, some great TA here, Ty. So 2050 cross. I mean, this is the one of the best. You know, you look at this and you think, yes, that's exactly what we teach in our course, isn't it?
Yeah, that's right. No, it is 100%. Very, very technically sound. Love it. You can't go wrong when you're trading like that, can you?
Did you see Tristo's comment? Tristo says, brave man dealing with an X so often. That's pretty funny. Sometimes the chat cracks me up. That's pretty good, bro. So, yes, well, either side, X's can be dangerous. You got to stay away. All right, so we've got here the resistances and the supports. I like it a lot. And it's not the only time we've seen this recently. We saw it with the nasty snowflake. The nasty snowflake came through for us. a few weeks ago. It had that big rally. It came back down to the previous resistance, which became support. You had that little kind of bullish hammer. You don't have to, when you see a candle like this, Tyron and I never say buy that dip. Okay, that's bad. Do not buy off that candle. Even if it's coming into key support, you will get burnt a lot of times on this candle. So you wouldn't be in this one. You wouldn't be in this one. You wouldn't be in this one, but you'd be getting damn excited. Then you see this one, you may still not actually be in. But upon this closure here, this one here, you should be buying. Okay? And it's the I know that seems like, or Tom, Ty, how do you figure that out? The reason why is because, think about it. Monster rejection. I don't know why. Then we have a sell-off again. We have a very good-looking candle. Now, figuratively, the next day, we might have seen follow-through by a percentage above. We could have had a closure here. That would have been our trigger, wouldn't it, Ty? And what a damn good trade it would have been.
Oh, yeah, 100%.
But it took the next one, and then bang, we get that movement up. That's when you want explosive next-day trading action, remember, it's near the close that's the key. And this is for the private community only. You guys. The open, often the pre-market will have already started the move. The close is often the key. That's the one that locks it in time. If you see a long leg doji, and then the next day you see a little closure that occurs above the long leg doji, as in like it's happening there, and you come in near the close of the market, and you're like, damn, that's going to close. Now, obviously, you never really want to go in just before the close, but if you're trading a few minutes before the close, Ty, or even the just slight aftermarket, it might be the opportunity for you, isn't it?
Yeah, that's not the end of the world. I mean, yeah, when you're only what's the worst that can happen in a minute or two, unless there's like a tsunami?
I've seen it
so
happen.
Realistically, most of the time you can take that chance. You know, like you're not being silly by doing that. Yeah. But we're talking about trading in the middle of the day and saying, "Oh, that'll do." That's a very different story. A lot can happen in half a day. Not a lot can happen in a couple of minutes. Mm-hmm. Especially, yeah. So that's where your opportunities can be, most definitely.
Yeah, the close is the key, guys, on these ones. We also saw it even with Enphase recently. Another one that closed above one of our favorite things to see. We close above a rejection candle. You take maybe the entry here. Okay, you cry the next day a little bit because it's down, and then you get rewarded by a movement straight into 200. Now, anybody that's trading this better have a stop loss that's going to at least absorb that red day. But this particular type, like you've got the trough, the peak, the higher trough. You've already seen a closure above. You get the nasty rejection. You've got entries here. You've got entries down here. I mean, there's 2 entries here on Enphase, 4 day trade opportunities. You would only be in this trade for a few days. $200 should have always been your first target. If it goes back up and breaches 200, where's the next target? 220. So it's really good to bring this stuff together. And as you can see, if you go and have a look at certain kind of indices or certain ETFs, here's the example of TAN. I mean, TAN looks really good, Ty. This is the solar ETF. That's a solar company. If you've got a beautiful double bottom here and you're starting to see that breakout, which we did over here, at the same time as Enphase is making that lightning bolt, it goes hand in hand that they're good trades, isn't it?
Yeah. When you start to see that correlation happen against those sorts of things, it makes a big difference. It adds a lot more validity to the technicals. So, and you like that. The more evidence you got, the better you're going to be. That's the case no matter what you're doing, even if you're just trading standard TA, right? The more evidence there is, the better it's going to be. But when you can start bringing in correlation from other sources, it's even better. Now, especially when it agrees.
Yeah. When it agrees. Robert Wilson says, I'm always too late. I'm interested to hear your response here, Robert. Can you tell us why you're always too late? Is it because you're not trading the close, or at least looking at the close, setting your alerts for it? Are you not recognizing possibly some of the candle formations that do lead to better trading opportunities? I'd be interested to hear your response there. So look, Ty, we go through all these stocks right now, and there's been plenty of good ones. We had Beam. We had that as a very nice, I think, 2-hour, 4-hour lightning bolt down here. That led to some explosive action. Very dangerous stocks, these biotech stocks. You can see here, trough, the peak, the higher trough, the closure above, and the absolute beast mode that it went on. Now, that may not be for everybody, but I think the thing at the moment is what we're trying to say on this webinar today is we're not going through any specific stock and saying, oh, we love this level or anything, because there's so many stocks that are at kind of like overpriced zones or zones that are near resistances. There are some stocks like this Pins one that got beaten down. Generally, when Pins gets beaten down, like it did over here after earnings, it takes a while and then it rallies. Now, you want to go and check other things with it, but the technicals here, we hope it starts an accumulation. But we're not going to forget about it. We'll set alerts for $60.87. We'll set alerts for underneath 57. And if this thing breaks out of the boundary, we'll come back and we'll look at this stock, won't we, Ty?
Oh, yeah. You don't want to be touching it right now. You just got to leave it alone, let it do its thing. A bit like gold in a sense, not as extreme, of course, but you've got to let it find its feet again and start to actually get some direction. That's what you're looking for. Don't try and guess the direction. You want to be letting it identify its direction.
I've got a question coming in here. It says TAN looks to be going down, not up. Look, TAN hasn't activated its final form yet. I mean, look, we've got a resistance here at 93.50. We know that's where the key is. I mean, this is the weekly here. We've got our trough, our peak, our high trough. Do we get our higher peak? That's when the real participation comes into the solar networks. But at this stage, yeah, look, it's bringing together the concept of, if you go into something like the 4 hour and you look at this TA, I like the base, I like the closure above, and the available information we had here moving into other technical availabilities. This is just an ETF. We don't want to look at the ETF and trade it necessarily. We want to go find the individual stocks inside of this concept that are making this up. Enphase was just one of them that was showing that kind of very, very sweet area. Will Coe says, calls and puts, do you follow the pack when you see heavy volumes such as what's happening on HYG, or do you use the data as a contrarian indicator? It's a great question, and I got to say, I actually got kind of caught up in one the other day, almost to my detriment. I'll admit this, on AMD. So AMD was, of course, very bullish. Let's have a look at the stock, actually. Might as well discuss this, because this is a phenomenon that I haven't actually really experienced in big stocks. I don't think we've really experienced it this type of way. Now, obviously, we have the apes, yeah? The big apes. The apes are everywhere. They're in AMC, they're in GME. Now these apes or these retail traders are heavily into popular stocks. Now, one of those was AMD. You could look at options generally as a little bit contrarian indicators, couldn't you, Ty? Like when you see big options go through, let's say it's $1 million or $500,000, that's clearly Wall Street or some big trader having a crack that's probably better informed than many people. Now, when you see lots of little herd retail traders buying something, that's usually when you want to start using it as a contrarian indicator. The thing I would stay away from, and what I would warn people now, is if it's on this list, like hype equity list, and you're trying to short against that trend, I wouldn't do it. Because the amount of retail traders that are buying options is, I've never seen anything like it, Ty. The amount of retail traders getting into options. It's the eventual thing everyone does, but have you ever seen this many people interested? Ever?
Yeah, it's amazing. Well, I mean, people love leverage, right? And that's they're drawn to it like a mosquito to that blue light, and it's easy to see why. The rewards are great and the risks are often relatively controlled. So I can understand why, but the problem is you're doing. It's a leverage form of gambling if you don't know what you're doing.
Mm-hmm. Yeah, and that's the thing. This is the new trade for a lot of people. Well, we've found leverage. Robinhood's just found leverage, and they're about to go nuts on it. And that's why I think when you see all of these stocks, whenever you see these, they're all of the people here buying them. All right, they're just buying them. They're not selling them. They're buying them. Most of the retail traders. If the hype goes Richter scale 7, like it is on Pfizer right now, like it was on Moderna, like it has been on AMD at one point, you'll notice that's dropped off. Wall Street might let it go through to the keeper. And what that means is that although you're going to see a monster stack of options come in, and you would think contrarian indicator should mean that we should sell credit on that, what I've noticed on these stocks is they're letting it go up and then punishing them week 1, week 2 later.
100%. Now, just to clarify, our man SW said, well, if you tell everyone options are safer, you've got to expect people will go there. Mate, if options are the safest investment vehicle there is on the planet, I'll tell you that as a fact, when you know how to trade them and if you trade them correctly. If you don't know how to trade them, they're just as dangerous as any other leverageable product. Options are one of the only instruments in the financial markets that you can absolutely guarantee your worst case scenario, even if the world comes to an end, which wouldn't matter at that point anyway. So when used correctly, options are the safest investment vehicle there is, and that's why we love them, and that's why we advocate them. It doesn't mean that you can't know what you're doing. You've got to know what you're doing.
Oh yeah.
But it's like anything. If you put anything, even a Volvo's the safest car in the world, isn't it? But you put that in the hands of a psychopath driver, and they're still going to find a way to hurt themselves. It's the same thing. It is, right? So you put any product that into the hands of someone who doesn't know how to use it, and it's going to be dangerous. There's no such unless it's a term deposit, and they'll find a way to break the term deposit and lose their interest. Someone will screw it up some way or the other. You've got to know what you're doing. That's the important part. Don't trade them unless you know what you're doing. Yeah.
You'll put your term deposit in a credit union that doesn't actually exist, like that one that had to do with trees back in the one in Geelong years ago.
Yeah, exactly. Pyramid.
The pyramid one. Yeah. Can you believe that bank had the picture of a pyramid? How can you trust any bank with a picture of a pyramid?
In the day, I think the pyramid scheme was actually brought on the back of that, though. I think that's where the word came from. I reckon. Well, I think we'll claim it out here in the Bellarine.
Well, you're going to claim pyramids?
Well, the pyramid name, the pyramid scheme came from that scheme.
Yeah. I thought that was some thing that. I'll wait if we talk about it. I was going to talk about pyramid schemes, but anyway. But yeah, what Ty is saying about risks is absolutely true. If you buy a call or you buy a put, you have a fixed risk. That is the debit that is taken from your account.
Spread. There's lots of nearly every
spreads. Different ways of playing it, of course. But if you're just selling a naked put, or you're selling a naked call, then you're insane.
And I can assure you, SW, that I'm not sure what your name is. I'm just going to call you SW. But the volume that you saw on Thomas's screen there of those people trading those options with gay abandon, they are not going there on our recommendation. I can assure you of that. The people that we talk to are relatively qualified, and they will be a lot more qualified very shortly. So, but yeah, I think you get the gist of what we're talking about. If you put a leveraged product in people's hands and they don't know how to use it, they're going to misuse it. And although they're not going to bankrupt themselves because leverage doesn't allow for that really with sensible options brokers, what you will do is burn up money like it's going out of fashion. You're literally burning up money. So if you don't know how to use them properly, and I think that's the point. You need to understand how they work, why they work, and when you understand that, they are the safest investment vehicle on the market.
Yeah. All right. You've got it from the man himself right there, guys. So we move over here to QCOM, Ty. This is something I've been following in the room. Look, I did certainly go in straight after. I remember the 150, and I was like, there was options there, and I was like, guys, I got 150, 150, 150. But I'm still pretty big bull here on this TA, Ty. Yesterday kind of looked like a little nasty stop hunt. Do I love QCOM? No, it's a slower moving stock. I don't even really know if the technology is that good anymore. Probably isn't. They're losing some contracts. However, this is a good seasonal spirit for it. It's a serious seasonal time. I posted that in the rooms, that it outperforms many other things during the market over this period, and that we have here the resistances becoming support. Now, a few people said, was yesterday a bit of a stop hunt? It certainly could have been. This is not the stock that you go into expecting 20% days and stuff like that. It's just not going to happen. But still, the technicals are holding up. For now, what I would be looking at if I wasn't in this trade and I was looking for further confirmation to get into something like this would be a new peak. So I would want to see at least this 148 taken out. And when that closure occurred, for us to then see further participation in the market. Because basically it looks like it kind of downward sloping on that higher time frame that you could see. Get past 148, you activate the participation phase after this kind of rally that's already occurred, and that's where more of the scaling comes in from Wall Street. That's where I expect options to start coming in, to equity prints to start coming in, and scaling coming in. So look, it's a tough one this week, guys. We've got core CPI, We've got a time that's kind of weak in the market. You can see some things are just ridiculously priced. Some things like the Chinese stocks might be really fairly priced. I mean, there's risks here, of course, as we know, which is geopolitical. And then we've still got earnings season for certain stocks as well, things like Disney, Dash, all of those types of ones. So I think really the story of today is that there's different ways to make money out of the same chart. Once you understand the different ways to make money out of the same chart, you can then select the right strategy for the right time. Isn't that right, Ty?
Yeah, that's exactly right. And when you understand that, that's when you really start to really let the market, do its thing. You've got to work with it. You can't force it at the end of the day. And understanding what the market is doing is the most important thing. Once you understand it, then you can apply the right strategy to what you're trying to achieve. And once you've done that, you're well on your way to great success.
I think this is a really good trade here on Love. This comes in from a request from who was this?
I think it was Dav.
Dav. Okay, thank you very much, Dav. So I like a few things about this one, Dav. I mean, obviously you've got the wick highs here. I like bodies preferably, but wick highs, you can see the closure occurred above. That would definitely be a breakout that many people will have taken initially. Then you get that conservative kind of pullback into the bodies, and you get that follow-on effect to the new peak here. This is a specialty store retail company. It does look good from the technical perspective. You've also got a nice little TA kind of trend line that's gone behind it that should kind of stop longer term. Actually, I think does that go further? I'm just having a look here. Probably not. I probably prefer this one over here. So yeah, you've got a nice little TA trend line that's been holding up the last swings as well. It's not bad. You've got earnings coming up. That's going to be your major concern, but it's breaking out ahead of earnings. Could it be loose lips? Maybe. It's a $1.84 billion market capitalization here. Not too bad. Let's have a look over copper futures, Ty, and just quickly the US 10-year, as that's all going to explode in a few minutes when we see the CPI data that comes out, and I think about 45 minutes from now. Copper is at the perfect point for it to have a tip over if it is going to. We've got previous kind of resistances, becomes support, becomes resistances again. You can see how pivotal this is for copper. Ty, what are your opinions here? Does copper still matter 1 year after? Not as much, yeah? But still important.
Yes.
Yeah.
I was just like, I'm not gonna lie. I was typing and answering questions. I don't know what you were talking about. Could you just ask...
I'll keep going.
Sorry.
Yeah, no, sorry. I was just going to say, yeah, I saw you were typing there. So look, copper is something that we do look at in recessions, coming out of recessions. It's an economic health indicator. At this stage, it's becoming less something we look at. We're basically just going across, is the entire across the board commodities dropping? If they are, like let's say oil is dropping as well, oil gets through 65, do we have problems on our hands? You know, yeah, I think if oil gets under 65, 60 is the next technical stop for it. So we'll be watching that. It's at the tippity top here. See the resistance at 67. It's come back to the weekly 20 moving average. It's right where you expect it to be ahead of key news. We always discuss this. Where there's key news, you'll be at a key resistance or a key support on many major things. Another thing that's happening at the moment is the US 10-year. Now, US 10-year suddenly rebounded after the non-farm payrolls broke through, and you might say, well, how could we have traded that? Well, unfortunately, it's going to be the financials. I mean, you know, I was hating on JP Morgan the other day from a technical perspective, but again, it's playing chess. You've got to put your opinions at the door. We had a head and shoulders on JP Morgan. It wasn't active. If it's not active, it's not worth anything. Until it activates, you don't do anything. But look at this resistance. I mean, these are the same lines that I drew up weeks and weeks ago. You all of a sudden get a big activation coming in here, and that's led to a couple of days of good trading in the financials, which has led it to go to a peak level of resistance. Guess what? Ahead of the next big economic data. Understand that markets move into the economic data events. It's like non-farms. Okay, cool. We see the result. Let's move to the next point of resistance. Okay, core CPI, we break resistance, we move to the next level. You know what I mean? That's actually how it works. It goes through those points. So yeah, I quite like this. It did end up working out pretty nicely if you took even the Monday and the Tuesday trade to the long side, waiting for that completion. Is it my favorite type of trade? No, but it certainly was there across. And congrats to people that have been in the banks. When we have a look at JPM, which is, of course, JP Morgan, you'll notice that it's at a critical point here. And even yesterday, it actually broke ahead of the long leg doji. We're at the resistance. This is completely this is the critical point. If it doesn't turn right now, this whole left shoulder, head, right shoulder theoretical concept with the neckline isn't going to play out. But should you have activated it? No.
Well, it never gave you the signal.
Exactly. But I think a lot of people misinterpret TA analysis from activation of the trade.
Those people.
Yeah, those people. Don't worry, I got plenty of them in the comments, man. They hate on me on the daily. It's all good. DKNG, we've got a request here for this one. It's again another stock. Now DKNG, because they bought out one of their competition, I feel like it's going to be hard for it to break through this level. But I like this level, this 53, 54, 53 kind of 60 zone. No closure above equals no trade for me. But if it does close above, yeah, very good. I specifically liked the 50 into this move. I talked about it quite a lot. I talked about this series of lower kind of peaks coming through, the long leg doji, the closure above, the expiration of all the contracts, and then, of course, the retest move through. So, DKNG has been acting very nicely, very technically, needs to get above here to activate the next level.
I got you. I'm just reading the comments. The comments are funny. That is all true. Yes.
Christopher Collins says, I'm from San Diego and I see Qualcomm buildings every day. Is that bullish? Is that bullish, Christopher, that you see that? I see AMP logos every day. I don't know if that means I'm bullish on AMP. Only Australians will get that one if they know the stock.
Christopher Collins, I know that you're obviously not going to be able to come to our Cairns conference because obviously you can't travel. But by golly, we are going to be in Vegas in June of next year, and we fully expect that all of you will be there. It is going to be a blast. We did release the conference. We had some pre-sales over the weekend, and we released the main conference. The link. I'll get you to put that link in. I can't find it. I'm just going to talk about it for a minute because I'm very excited. I cannot wait.
Okay,
cannot wait for the conference in Cairns. We are 78 days away, as the email said. We have got some of the coolest people going. Funny enough, a lot of the cool people who we really, really would want to be there have already actually booked their tickets, which is awesome. And nothing's going to stop us. We're going to go to Dave's house. If Novotel closes down, Dave lives in Cairns. We're just going to go to Dave's house and run it from his lounge room. And so it's going to be awesome. So if you're from Australia, of course, it's only going to be for Australian people, unfortunately, this year because we can't have travelers. But if you are from Australia and you would like to join in, the tickets are strictly limited because of the COVID restrictions on how many people we can get in a room. It is almost 50. We only launched it today and it's almost 50% gone already. So if you are thinking about it, definitely let us know or click on the email that you may or may not have received. If you haven't, let us know because it is going fairly quick and we can't extend it. We'll be lucky to hold these numbers actually because they're only letting a certain amount of people in a room at a time, of course. So we all understand that. We're going to do the best that we can. But it's going to, what we know for sure is it's going to be a hell of a lot of fun. And by golly gosh, we're going to get Tom drunk. I know I've already seen comments. I've seen it happen. He's not going to be able to get away from it. And we're going to get into a live stream drunk.
Oh, no way. Come on, man. No.
He's going to do
I'll
his Friday
have some drinks,
night live
but
stream.
I'm not going to get drunk and live stream. I won't even know how to click the buttons. Anyway, I put the link in there. Definitely come check out Cairns. A few people saying, it's in lockdown. It's not right now. It's in October, the end of October, guys. So a little bit of time there, but we're obviously pre-selling it, setting it up. Of course, the tickets are refundable.
It'll be fine.
If COVID gets locked down, it's going to be, refunded, those tickets. Don't worry about that.
100%. You got nothing to lose. If it gets locked down, instant refund straight away.
Of course.
But I don't believe it will be. I think that, Cairns exited they were locked down for about a week. I think that's already done now. That finished up yesterday. And realistically, we've got to remember that winter is the worst time of the year for the virus. We know that. It happened all overseas. Same here. October, yeah, we're nearly entering summer at that point. I think it'll die down. I'm probably my biggest concern is people from New South Wales. I think they might be the ones that struggle. But we'll see how we go. We'll do our best. And if it's New South Wales, they can't get in, then yeah, that's going to be unfortunate. But of course, you've got nothing to lose. We'll refund it anyway. So let's hope it doesn't. Let's hope it's not an issue, because it would be a really, really good event, and we want to make it annual, of course. So yeah, this is our precursor to the Vegas one, and we cannot wait. So really, really looking forward to it.
All right. Well,
yeah, you're right, Stephen. He does get drunk on one can on a Friday live stream, and that's actually a ginger beer.
It's hardcore. It's like 8%, man. I used to drink a lot. Oh my god! I remember when I could, and now nah. You could put 3 vodkas in me. I reckon I'd be gone.
Well, I have it on very, very good authority. I have it on very, very good authority that Chris Weston from Pepperstone is going to do his darndest to get him absolutely trashed. And I heard that. I heard that from the source today. Yeah. So
just get Tyrone drunk on this vodka orange. All right, guys. Thank you so much for joining us here. And is there any good opportunities right now? Well, there's always a new opportunity in the markets. I guess there's a bit of stock in this CPI data that's coming out. We'll be seeing that in half an hour. I'll go bring the other stream up on FX Evolution, the main channel, for I guess the 10 minutes before. So I'll do it at 10:20, and we'll go over this CPI data. I'm actually intrigued to see how it comes out. More importantly, how the market's going to react to it, and then hopefully get some damn direction here, so we can actually start doing some nice, good swing, because it's been day trade scalp sessions, and I'm not really the hugest fan of the day trade scalp session. I prefer the swing, because I'm lazy like that. I like to click the button and then set my alerts.
Tom, can you just do a very, very, very quick rundown on the mentorship? I just saw a couple of people ask for it.
Oh yeah, so the mentorships are awesome. I've been constructing with Tyrone the program, which is looking sweet. It's going to have a couple of weeks of actionable data, how to bring them in with the technical analysis. Obviously, some very cool strategies that go on from already the existing Ultimate Masterclass, and really talk about scaling. They're tailoring that scaling into, I guess, specific people's needs, the different psychology behind that. The 2-3 power play, as I call it, Ty, very cool strategy that seems, kind of basic on the surface, but you're going to see the power of it. And then we'll go through the power of credits, of course, with options, the power of debits with options, specifically how to recognize the certain different trading strategies and when to use those ones. I mean, it's really the evolution of the course, I guess you would say, and the evolution of what we do in the live streams. It's what we do. So if you're interested in that type of stuff, I don't know why you wouldn't be. It's pretty damn sweet. We'll finally be doing it. We'll finally be releasing all of that stuff.
It'll be mid-September. We'll have dates next week, but I think mid-September will be the launch for that one. We're going to do it in groups. Mid-September will be the launch for that one.
It'll be done in groups of small groups, and those groups will be for different timeframes as well. So we're hoping on opening it up to, obviously, the US. We can work with US timeframes. Most people will probably want to do the evenings. That's easy for us here in Australia, because obviously it's our morning. We'll be able to do that. We'll be able to do Australian clients. We'll be able to do Europeans. And we're really looking forward to taking this thing global and I guess putting together the final pieces of the puzzle. One thing we didn't discuss here, Ty, today is obviously the elephant in the room right now is the old BTC Ethereum. Look, that has been where the biggest trades have been. My mate today messaged me. My God, he made a lot of money. Lucky. If you want to check the code, it was an IOTX. But look, that ship's probably sailed. On the big two, Ethereum and BTC, you can see here the long leg doji. No decision has been made. There's been great $200 increments here that we've been covering for the last couple of weeks on these. I actually wouldn't mind to see a bit of a pullback here in the market, a little bit of consolidation after these large moves. But if the hype's there, then I could easily see Bitcoin going into a 50K actually. And I think this is the beginning of another little rally going on here for the next couple of weeks and months. So from Tyrone and I, thank you very much for joining us. We will be back in 20 minutes on the FX Evolution main channel. Just go search it, it'll come up. And we'll be going for another hour and a bit there. It's a big night Wednesdays, Ty, for us. And we love doing this stuff. So hopefully the private community learned some stuff today. You got some value out of this webinar, and I like to think that next week we'll have some activatable trades as well.
Awesome. That is brilliant. Pyro has said he's already booked his flights and his hotel. Jesus. And I haven't even booked my flight.
I was going to say he's more organized than I am.
You're more organized than we.
Yeah.
That's awesome, man. Look, I can't wait to see you all. Like, literally, for the most part, we haven't met most of you. So we're really, really looking forward to actually meeting everybody in person. And most importantly, obviously, you guys meeting yourselves as well. And, really, really taking the community to the next level. So cannot wait. Counting down the days, 78 days. So thanks, everyone. Really looking forward to the Q&A tomorrow night. And also, of course, the Friday wrap in the morning. So we've got lots going on tomorrow and Friday. And, of course, we'll see you all in the Discord. So thanks very much, and we will see you very soon.